Let's talk about something huge that's happening right now in the United States. Under President Donald Trump, the US is considering backing its wealth with cryptocurrency? Yes, you heard me right, crypto. Now I know what you're thinking. Wait, wasn't Trump just calling Bitcoin a bubble? Well, it seems he's had a change of heart. Trump has just proposed the idea of creating a US crypto strategic reserve, which would officially back the nation's wealth with digital currencies like Bitcoin, Ethereum, and more. This could be a total game changer for the economy, but is it the brilliant move Trump thinks it is? Or are we about to make a massive gamble with our national wealth? One that could explode in everyone's faces? Stick with me as we break down what's really behind Trump's crypto play, and why this might just be the most dangerous financial move the United States could make. Trump recently announced his big idea, a government-backed crypto reserve. Now he's calling it a strategic reserve, which sounds impressive, right? Like some sort of financial fortress, a new age of money. But when you actually dig into the details, you might find yourself wondering if this is just a new twist on an old trick. Here's the thing. At the heart of this plan, Trump proposes to back U.S. financial reserves with digital assets, Bitcoin, Ethereum, and a few other altcoins like Solana's dollar Sol and Cardano's dollar ADA. All I can say is, whoa, that's a spicy meatball. If you're not familiar with these cryptos, let me break it down. These are the roller coaster rides of the financial world. One minute they're soaring, the next, they're crashing. Think of them like that friend who always has the craziest ideas, but you can never count on them to show up on time, let alone deliver. But what exactly does it mean for the U.S. economy if we start tying national wealth to something as volatile as crypto? And why are we even talking about this? I mean, let's face it, Trump's timing is interesting. Just after the crypto industry pumped millions into the 2024 election cycle, yeah, his campaign got a nice chunk of that. Trump decided to get cozy with crypto. Coincidence? Or is it just a case of following the money? Let's ask the obvious question, who actually wins if the US starts investing in crypto like this? The answer's pretty simple, it's the people who are already heavily invested in crypto. Let's look at some of the key players here. Trump's chosen crypto advisor, David Sachs, who, by the way, has deep pockets in these altcoins, and the Trump family's decentralized finance venture, which is also heavily invested in some of the same coins. In other words, it smells a little fishy. It's like inviting someone to a poker game where they're already holding a royal flush. What are the odds of them losing? Slim to none. Meanwhile, the average Joe, who's just trying to stash some savings in a secure place, gets the short end of the stick. When the market inevitably crashes, because it will, trust me, who's going to be left holding the bag? The regular folks who thought they were getting in on the next big thing. Now I know what you're thinking, wait, hold on, could this be insider trading? Well, it's a great question. Hours before Trump's big crypto announcement, there was a mysterious $200 million purchase of Bitcoin and Ethereum. Now, it's not a conspiracy theory, but it does raise some eyebrows, right? In the stock market, if you bought up a bunch of shares right before an announcement, we'd call that insider trading and the SEC would probably come knocking. But in the crypto world, not so much. It's the Wild West out there, baby. This raises a very important point. What's the difference between legitimate investment and, well, something that just feels like manipulation? And how do we even trust that the people in charge are acting in the public's best interest when they could be looking out for their own bottom line? Here's where things get even more complicated. The crypto industry at its core is all about decentralization. You know, getting rid of the middleman, sticking it to the government, and being your own bank. But Trump's plan is asking the government to become the middleman. It's like the world's biggest oops moment for crypto enthusiasts. You spent all this time talking about how great decentralized, non-government controlled assets are, only to get a government-backed crypto reserve? It feels like the ultimate betrayal. Imagine working your whole life to become an entrepreneur, only to find out that your business is going to be taken over by the same bureaucrats you've spent years criticizing. It's almost like finding out that your free concert ticket comes with a VIP pass to a completely different show that you didn't even want to attend. What about Bitcoin? Isn't that the real deal? Let's get to the heart of this. Trump's big plan includes more than just Bitcoin. It includes a bunch of altcoins that are much riskier, less stable, and frankly, not as well understood. The reason why Bitcoin is often called digital gold is because of its relative stability compared to other cryptocurrencies. It's like the grown-up at a high school party. The others? They're like the rowdy kids that keep knocking over the punch bowl. If you want to back a national reserve with something that's going to hold its value, wouldn't it make sense to put your money in Bitcoin, or something else that has a proven track record? Look, we get it. Everyone loves the idea of making a quick buck off Solana or Cardano when they skyrocket. But do you really want your country's financial future resting on a couple of speculative tokens that could vanish just as quickly as they rose? Now let's talk about bubbles. Crypto enthusiasts love to talk about how their assets are going to soar in value, but let's not forget that we've seen this story before. Remember the dot-com bubble, the housing crash? Yeah, those happened because people got so caught up in the hype that they forgot to think about the fundamentals. A lot of startups in the late 90s were built on pure speculation and hype rather than sound business models, and we all saw how that turned out. Fast forward to today, and we're seeing the same thing in the crypto world. People are investing in coins because they think it's the next big thing, but they have no idea what's backing these projects. Sure, they have flashy names, strong communities, and promises of financial revolution, but what happens when the market crashes? That's the thing about speculative assets. They don't care about you, your hopes, or your dreams. They'll just take your money and leave you with a whole lot of nothing. Here's a crazy thought. What if we didn't bet the house on speculative digital tokens and instead invested in something reliable? Something that has stood the test of time. Oh wait, there is something. Gold has been the cornerstone of national reserves for centuries. It's stable, it's tangible, and guess what? It can't be hacked, rugged, or erased by a bad decision in a government office. Gold doesn't care about market swings or government policy. It's been a store of value through wars, depressions, and economic collapses. But here's the kicker. When the US government starts eyeing crypto as a new store of value, what happens to gold? It gets shoved to the back seat, while speculative assets take center stage. The result? A very shaky financial foundation that could crumble the moment the crypto market decides to implode. And yes, it will happen. You might be thinking, why does this matter for you? Look, you don't need to be a financial expert to understand that what's happening right now is dangerous. If you're sitting on your couch thinking, hey, crypto sounds cool, maybe I should get in on this. I get it. The fear of missing out is real. But just remember, you're not investing in the future of money. You're investing in an experiment. And experiments go wrong. The risk here isn't just financial, it's societal. Imagine the kind of control that comes with tying the country's financial system to something that's completely manipulable. The government would hold the keys to the entire digital economy, and trust me, they're not going to be looking out for your best interests. The only ones benefiting from this will be the insiders, the ones with the power to pull the strings behind the curtain. So, what does that mean for you, the average investor? Be cautious. Don't get swept up in the excitement. You're better off sticking with assets that have proven their worth, like gold. Now, if you're tired of the banks and so-called financial experts giving you advice that keeps you broke, I've got something better. It's a guide I put together called Beat the Bank, and it's honestly one of the most powerful tools out there if you want to take control of your financial future. Inside, I break down exactly how the banking system is designed to keep you poor, why your savings are actually losing value, and what the top 1% are doing differently. You'll get 28 reasons why traditional banking holds you back, a full 12-month plan to build wealth step by step, strategies covering investing, real estate, passive income, crypto, and even a special type of investment account that most Americans don't know about. Overall, the guide is jam-packed with a ton of value and can fast-track you towards your financial goals. Let me make it a no-brainer for you. If within 30 days of purchasing it you don't like it for any reason, I will give you a full refund. No questions asked. So if you're ready to stop relying on broken systems and actually learn how to grow your money the smart way, click the link in the description and check it out. You won't regret it. Now, if you're tired of these so-called stock market experts blabbing about the same picks over and over again, I've got good news. I found an investing newsletter that completely blows the competition out of the water. They find highly asymmetric stocks with low risk and high reward, the kind you'll never hear about on CNBC or other major stock market news sites. I'm talking about companies like Ukrainian agri-producers during a war, or Bank Handlowy in Poland, a solid bank trading at insanely low valuations. These companies aren't flashy. Many of them produce boring products or provide services in oil and gas, banking, and agriculture. But here's the thing, they make money. And by investing in stocks like these, you can too. For a limited time, they're offering a 30-day trial for just $1. But as a thank you for watching this video to the end, I can do even better. Click the link in the description and tell me your best email address so I can send you their recent newsletter for free. It comes with 5 stock recommendations as well as high-quality market analysis, so make sure you check it out. You've literally got nothing to lose.